Cenovus surprised everybody this week with a $1.5 billion deal to sell new shares in a bought deal. Now we're wondering if this is a one-off deal or if there's more to come in the oil patch. Tim, what do you think?
I think people don't know. And I know that's not an answer people want to hear right now, but I know a lot of bankers were hoping that, with the Cenovus deal, that it would come, it would blow out, it would be a sure sign that, the market appetite was there, you could finance. That didn't happen. The share sale has been slow. There has been demand, but it hasn't fully finished just yet. And the problem now is that, energy prices are starting to fall off, and for that reason, new sales will be harder to come by, and that just leaves a kind of a cloud of uncertainty over the industry.
Do you think part of the surprise is the fact that oil prices continue to fluctuate, that investment bankers and companies have been waiting for some stability in the oil price before they made a deal like this?
Yeah, I wouldn't characterize it as surprise, because if you look at what's happened in the market, that's just been the trend for the past 2 months, right? But they knew that going in. I don't think they expected the oil price to fall off as much as it did right after the deal was announced. So that's been a big problem. But that's just kind of the nature of these markets. And I think what also clouds the picture even more is the fact that it was Cenovus. If it had been, let's just say Suncor or some other kind of top-notch name, people might have been more comfortable. But Cenovus is a company that had a lot of debt. It had tried a lot of things before it resorted to issuing shares to raise cash. And then the share sale came and people kind of thought, well, why now? What does this really mean?
Yeah. Now, the other big question is how these new shares are being received in the market by both institutional players and the retail guys. What's the early signs?
Early on, there was decent demand, about split half and half with institutional buyers and retail buyers for the Cenovus deal. The big question now is, who's going to step up to buy kind of the remaining 1/3 of the deal? It looks more and more like you might have to rely on retail investors, and to lure them in, you're probably going to hear more and more talk about Cenovus's kind of juicy, almost 5% yield, because that can lure kind of mom and pop types. Yeah. But going forward, and a lot of energy names don't have as big of a yield. Or if they used to have a big yield, they've cut them recently.
That's right. Those yields are no longer rock solid.
Right, exactly. So the selling mechanism, or really the marketing tool, is probably going to be strong balance sheets, good assets, things of that sort, rather than just luring for kind of the easy money.
Yeah, it'd be interesting to see which sort of retail investors are actually buying these shares, because retail investors have been looking at the oil patch as kind of a deep value play, and everybody's trying to time the bottom of the market. And Cenovus is clearly in a little bit of trouble here, and in making such a defensive move as they've done with the bought deal, you're kind of wondering if that's another sign that we're at the bottom.
What always scares me is kind of what you said there about retail investors trying to play a bottom. Retail investors shouldn't try to play a bottom. Who should really try to play a bottom are the likes of Canada Pension Plan or a big pension fund that has long-term horizons in terms of holding their investments. They can hold for 10 years if need be, because no one really knows when this is going to turn around. If you're looking for a quick buck, now's not the time.
Yeah, well, as we saw this week, Warren Buffett has been buying into Suncor, increasing his stake there. So it'll be interesting to see if he's one of those retail investors buying Cenovus.